Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about medical diagnostic sector and the 5 picks in that sector. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about these top 5 picks, a small request: kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can directly email me. You can get WhatsApp membership as well. Now, about the criteria for these stocks, these are established brands that get strong managements in their own right, diversified yet market leaders in this space, low debt and no pledging. Strong institutional holding is there, and solid return ratios and numbers they have been producing over the last 2-3 years. In terms of allocation, what you can do is put only 5 to 10% of your total holding into these stocks or any stock that you pick, and buy over the next 6 months till the end of the year, and mix it with your strong portfolio of large caps with these stocks, and hold for 4 years. You can get around 25-30% CAGR, and keep a 30% stop loss. If you are a risk averse, probably take a stop loss around 30% from your overall buy price. The first in this list is Apollo Hospitals. So it is a leader in the India hospital market. It has been gaining market share over the years and has produced very decent numbers and have reduced debt over the last 3-4 years since 2017 onwards. And now things are looking much better for the company, and the numbers that it has produced over the last couple of years, even after the pandemic went down, has been pretty good. Even the last 2 quarters have been pretty decent. And although yes, during the pandemic they made a lot of money, and then so the numbers do look inflated earlier rather than today, and you cannot compare that, but hopefully with the increase in beds and expansion in their business, I think it's going to set to do well over a period of time. Valuations are stretched, but I think numbers should support the business. And remember, it has its own moat and own leadership in its most diagnostic spaces, especially critical illnesses and treatment of critical illnesses. So consistent growth is expected going forward, and have consolidated for a while as a stock technically, so it is ready for a big move as well in 2023. The second is Reika, a little stock, a very small cap stock that did extremely well during the pandemic and showed very good traction in terms of sales. It provides actually medical equipment online, and is one of the rarest companies that mostly provide their products online, and growth exploded during the pandemic. It has a very strong management and return ratios are pretty good. Debt is low. It was darling of large investors with 10% public shareholding. So what is happening is 90% of the holding is with you can say main investor. At least 85 of it is with strong hands, and has been gaining market share as products are becoming more part of everyday home. So a lot of diagnostic products like sugar testing kits, or you can say diabetic testing kits, and other kinds of products like thermometers, digital thermometers, etc., are becoming people are becoming used to it and have been ordering online for the past 6-7 quarters, and I think trend will only increase as internet reaches all the nooks and corners of India. So I think a company for the future, a company that is going to do well once it has more expansion and expanded into other, you can say, websites and major portals on online space. So the third in this list is previous Denpro. Now, before I talk about this company, here's a little bit of you can say a warning on this, is that there is a issue with the management salary, which is quite a lot compared to its revenue, around I think 20% of its revenue or 25% of its revenue, which is a bone of contention, and that was the prime reason why I have not mentioned this a lot. But apart from that, the company has done well on the numbers front. It is a leading player in the dental space, only probably the only player listed in this space, and have grown at 40% CAGR over the last few years, has done extremely well. It is the only listed player in this space, and valuations are stretched, but growth is expected to accelerate. In fact, growth for the last couple of years hasn't been that great because of the pandemic. I think it's going to only do well once things open up completely. Remember, dental is a space in the medical domain in which there would be lesser people when you talk about the pandemic coming in and getting their teeth done, whereas there will be more people or more footfalls that will come in once the pandemic is over. So this is a big play on the opening up point of view. Exports to more than 70 countries, and have got a US FDA approvals for exports to begin there as well, and has an ambition of going up to 500 crores as sales by 2030. Currently, the sales are extremely less, so I think going forward should end up doing extremely well. The stock has run up, so on declines can be added, but again, have only 5% of your total holding into something like Prevest. The fourth in this list is Medicure. It's a fast-growing medical appliance company and has been doing well in a competitive market. It has corrected from the top, went up sharply in 2021 to about 13-1400, and has corrected from there. Return ratios are pretty strong, and now is trading at pretty reasonable valuations. There are a strong institutional investment into the stock, and I think more traction is expected as more people become health conscious and buy into products, as well as visit doctors a lot for their daily checkup or routine checkup. So polymedicure is something to be looked at now, especially after the correction that the stock has already seen. And finally, in this list is Skillpaste India, another very small cap company, a tiny company with 250 300 crore market cap. It is a leader in the testing kits of all sorts, gained market share in this turmoil over the last couple of years, has done extremely well by gaining new customers, and is now expanding base into Europe with their first facility coming in UK, and is trying to expand base into US as well, has got US FDA approvals as well. So captured clients across India, and their strong stock and high return ratio is there. The company produces margins of around 40% regularly, 40-45% operating profit margin. Debt and pledge free, completely debt free. In fact, it has around 120 crores of cash available, a company which is 300 crores of market cap. Only firm in India in the testing domain to have got the US FDA approval or USA approvals for their kits. Will perform well as export restrictions get lifted, which it has happened, and now it is trying to now beginning to export other kits. Got a 2 crore order already from export order, in which they have not explained that much, but they have done well there as well by getting a 2 crore order this month. So this was a video on the major diagnostic plays that one can look at from a 4-5 year point of view. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.